and some of the things that are important for us as individuals to note. And during the course of the week, from that last period to this time, even before then, we know that since around June or July, when the new tax law passed, this tax has been a very important conversation in Nigeria currently. What everybody is worried about, the new tax laws, how does it affect us, and things like that. So today, I would like us to look at two very key topics. Let me take in the slide. It's meant to be the Nigerian Tax Act as it applies to company income tax and personal income tax. That is CIT and PIT. So those are the two things we're going to look at. The as we saw last week, the new tax laws, there are actually four laws. One is the Nigerian Tax Act. The other one is Nigerian Tax Administration Act. Then we have the Joint Revenue Board Act and the NRS Establishment Act. So those ones are a bit administrative. I just want us to TA, that is Nigerian Tax Act. And under the Nigerian Tax Act, I just want us to look at two things: personal income tax and company income tax, right? Because I feel that those are the things that will affect each and every one of us as Nigerians. Okay, so first off, what exactly is personal income tax, right? So personal income tax is a tax that is imposed on the income of individuals who are either in employment or running their own personal business under a registered business name or partnership. So this particular tax is collected by state governments from residents in the various states, regardless of whether they are federal, state, local government, or private sector workers. So your personal income tax is taken by the state government. Okay, so for instance, I work for Federal Inland Revenue Service, and we also have the Lagos Internal Revenue Service as well. So the Lagos Internal Revenue Service is in charge of my own personal income, even though I work for Federal Inland Revenue. Okay, so same thing. You pay your tax based on the state where you reside. Okay, so you pay to the state where you reside. Okay. So we have categories of taxable individuals in Nigeria. So we say that taxation in Nigeria is based primarily on residency. Now, this is important because I have people in diaspora asking if they will be taxed. I think the only country that, or one of the major countries that taxes based on citizenship is the United States. Most other countries tax based on residency. So you are taxed based primarily on residency. Okay. Now, in some other cases, you have what we call the source rule applies, notwithstanding residency. So the source rule is where the money was generated from. So if the money was generated from Nigeria, you have to pay money you generated from Nigeria to Nigerian government. But generally for individuals, the it states that taxation is based on residency, right? And when we say individuals, we include business names, partnerships, and enterprises. Because as these business structures do not have a separate legal personality, as such, the incomes of these structures are taxed in the hands of their owners. So what we're trying to say here is that if you have a business name, that is, your company is not a limited liability company, right? It's a, let's say, ventures or something. You will also be categorized as an individual. Okay. So say you have a business
Okay, we have temporarily lost Burrows on us, so please let's exercise some patience as it connects back.
Annie.
Hello, can you hear me?
Yes, we can
Yes,
Hello?
hear you.
sir, please go ahead.
Yeah, sorry about that. I think I got locked out. Okay. So as I was saying, um we have what we refer to as resident individuals, right? And for you to be considered a resident individual in Nigeria, you must be domiciled in Nigeria. It is assumed that you have a permanent place available for your domestic use in Nigeria. You have a habitual place to abode in Nigeria. You have substantial economic and financial interests in Nigeria. You spend an aggregate of 183 out of 12 months in Nigeria. So in a year, if you spend about 133 days on average a year in Nigeria, we assume that you are domiciled in Nigeria. Then, or you are a resident in Nigeria. Then Nigerian diplomats in other countries. Okay. So resident individuals are taxed on worldwide income, regardless of where it is earned or whether it is remitted to Nigeria. Now, what does that mean? For those tech bros, all right. So for tech bros that work remotely, all right, even though your income is generated from US or UK, as long as you are resident in Nigeria, you are classified as a resident individual, and we've seen what makes one a resident individual, you will be taxed based on that income. Resident individuals pay their income to the relevant internal revenue services of their states of residence, as I said. So whether you're in Port Harcourt and you are working for a company in US, you're going to pay to Rivers State Internal Revenue Service. Okay. So who do we call a non-resident person? How do we say someone is a non-resident person? So these are individuals who are not domiciled in Nigeria, who do not have a permanent place in Nigeria, who have no habitual place of abode, who have no substantial economic or financial ties to Nigeria, and who sojourn in Nigeria for a period less than 138 days out of a year, and who are not serving as Nigerian diplomats in another country. So there are some key points we need to note, and that is that non-resident individuals are not subject to tax on their global income. Rather, they are subject to income tax in Nigeria only on income derived in Nigeria. So what do we mean by that? Take for instance, um, someone abroad comes to do a service in Nigeria, for example. Okay, after the person is done with the service, though let's say this person is from Netherlands, all right, so person is not a Nigerian, just came to perform a particular duty in Nigeria. After performing that duty, okay, the person is expected to pay a certain level of tax on the income that they derived from Nigeria. And we won't really go deep into this, but it's more or less has to do with the company who is offering to pay those people or pay the individual in that came to work in Nigeria. You have to hold their withholding tax and all that. But more or less, someone that is categorized as a non-resident will only pay income based on what they derived in Nigeria. Now, these can include employment income for duties performed in Nigeria, business income, and other passive income such as interest, dividend, rent, and royalty. Non-resident individuals pay their tax to the Nigeria Revenue Service, currently FIRS. So remember, we said that a resident individual will pay tax to the particular state where they are based, all right, or where they reside. But someone that is classified as a non-resident individual, and we've already specified what makes someone a non-resident individual, will pay their tax to the Nigeria Revenue Service, or currently the FIRS. Okay. Now, let's look at taxation on sole proprietorships and partnerships. Now, sole proprietorships refer to one-man businesses, or which many of us do. Let's say you start selling something and you want to make it official so that people will start paying to your company name, right? And not just your personal account. So you register a sole proprietorship, a one-man business. As I said, one-man businesses are classified as individuals, all right? Because under the law, you don't separate the company from the person. That's why it's called a one-man business or a sole proprietorship. So while partnerships involve the coming together of at least two persons to form a business, both of these business types are subject to income tax in Nigeria. It is important to note that sole proprietorships and partnerships are registered as business names and not as limited liability companies. As such, they do not have a separate legal personality as in the case of companies, okay, which is what I said. Legally, a sole proprietor or a partnership business is considered to be the same with the individuals that own the business. Okay, so as such, they are not. So as such, they are not. They do not have a separate legal personality, as I've said. Any profits generated by these businesses are taxed in the hand of the owners, currently as personal income tax and as income tax under the Nigerian Tax Act. So the owners are subject to income tax on a self-assessment basis and are expected to declare their income from all sources and pay the appropriate tax. Okay, the tax payable by these owners is due to the state. Okay, so if you have a sole proprietorship or a partnership, you are meant to pay your tax to the state. Only limited liability companies, all right, or liability companies pay their tax to the Federal Inland Revenue Service, soon to be Nigeria Revenue Service. Okay, so currently, so this is what causes problem most times under the new the Nigerian Tax Act. This is the issue. So I want us to look at the old rates under the Personal Income Tax Act and the new rates under the Nigerian Individual Tax Act. Okay. Now here we see that your first 800,000 is taxed at 0%. The next 2.2 million is taxed at 15%. This is for the new tax law. The next 9 million is taxed at 18%. The next 13 million is taxed at 21%. The next 25 million is taxed at 23%. And anything above 50 million is taxed at 25%. Now, individuals in this context include reference to sole proprietorships and partnerships. So if you have a sole proprietorship business, okay, or a partnership business, this is how you'll be taxed based on the revenue generated over the year. Now, the taxation of individuals in Nigeria is on a progressive basis, where the tax is dependent on the chargeable income of the individual per the graduated tax table that we have here above. So this is on the left is how it was before, the old tax rate, and on the right is the new tax rate. Now, you would observe that in this previous tax rate, no matter what you earn, you are going to pay a certain level of tax, right? But with the new Tax Act, your first 800,000 will be taxed at 0%, meaning those that earn at about minimum wage would be taxed at 0%. And we're going to look at some real world examples. But before we go into those real world examples, I want us to know that, so there's another confusion that people have, which is they think that it is all their income that is going to be taxed. But it's not all your income that will be taxed. We have what we call deductions, right? This is not an exhaustive list of the deductions, but this is just some of the notable deductions, right? So from your income, we said that this is eligible income against eligible deductions against employment income. So in determining the taxable income of an individual, the law allows for deductions of expenses. These allowable deductions include the National Housing Fund, which is earmarked at 2.5% of your basic salary, where applicable, the NHIS, the pension scheme. So all these things are not taxed. Your pension is not taxed, or the money brought out from your pension is not taxed, right? Interest on mortgage loans used to develop an owner-occupied residential house is not taxed. Life insurance or insurance premiums are not taxed. So life insurance for the employee of their spouse or their spouse rather is not taxed. Deferred annuity contracts for the employee or spouse. Then we also have some other ones like rent relief. Now, this rent relief is very important. So there's a 20% deduction of annual rent paid up to a maximum of 500,000. So simply put that we individuals have a rent relief of about 500,000, but this is for those that are paying rent. If you are not paying rent, if you have your own house, you're not eligible to this particular relief. For those paying rent, the government gives you a rent relief of 500,000, okay, that you remove from your income as part of your rent. So now, I want us to go to some real world examples, right? So let's say, for instance, I earn 67,000 a month, right? Someone that earns about 67,000 a month roughly makes about 800,000 a year. All right. So that person will not be taxed. Now you will be surprised. Someone was saying, who makes this amount? I was telling the person that you'll be very surprised. Problem is that we're in Lagos, and in Lagos, everybody has money. Or when you go to other parts of the country, you see that someone earning 67,000 is a middle class person. So someone earning 67,000 a month approximately is considered will not pay tax, right? Because we say that your first 800,000, okay, is at zero tax. So if you're earning minimum wage, and minimum wage currently now, minimum wage is 70,000, and when you add those other deductions, you see that it will be less than that 70,000 take home. So at the end of the day, you will not be taxed, right? That is generally the idea, not to tax the poor, right? So you will not be taxed, or the very low earners. You will not be taxed. Now, for which is a bracket in which this next bracket is where many people that just enter into the job market newly usually fall into this bracket, which is where you earn, let's say, around 250K. All right, between I know when I first came to Lagos, or when I was still looking for a job, most of the salary ranges were around 150, 100, 120, 150, and so I know that this is where many of us are. Many of us used to struggle with this particular income bracket. So now, how do we calculate this particular tax? So let's say you earn about 250 a year. That is approximately 3 million. Sorry, 250 a month, 250,000 a month. That is approximately 3 million in a year. All right. Now, what this new tax law says is that your first 800,000 will be charged at 0%, right? So out of the 3 million you make in a year, approximately, 800,000 will be removed and will not be taxed, right? So when you remove 800,000 from 3 million, you're left with 2.2 million. All right. Now that 2.2 million will be taxed at 15%, right? So that 2.2 million tax at 15% is about 330,000 a year, which is approximately 27,000 monthly for someone that earns 250,000. Okay. So I want you to, while we go through this calculation, you know how much you're earning, you know how much your yearly income is or your monthly income is, so that you can do the math alongside me, right? So we have the next bracket, which is, let's say, someone that earns about 1 million a year, right? Now, someone that earns 1 million a year, the first 800,000 from that, sorry, 1 million a month, which is 12 million a year, apologies, 12 million a year. The first 800,000 from that 12 million would be taxed at 0%. So more or less you have 800,000 relief. Then the next 2.2 million will be taxed at 15%. So out of that 2.2 million now, you're left with, from that 2.2 million, you're left with about, sorry. So the next 2.2 million will be charged at 15%, right? So 15% of 2.2 million is 330,000, right? So you have the first 800,000 charged at nothing, the next 220,000 charged at 15%. So what are you left with? You're left with 9 million, right? Because you have 800 plus 2.2, that is 3 million. So your 3 million minus your 12 million. Okay, so what you're left with is 9 million, right? That 9 million will be taxed at 18%, which is approximately 1.620 million. So more or less, for someone that earns about 12 million a year, your yearly tax will be 1.9 million, or approximately 162,000 a month for someone that earns 1 million monthly. Then we have the next tax bracket. Okay, I want to take my time because I know this question is it could be a bit confusing. So that's why I want us to just take our time to at least understand it. So for the next tax bracket, which is someone that earns around 2 million a year, your first 800 no tax, the next 2.2 million at 15%, the next 9 million will be at 18%. Then what is left is about 13 million, right? Because that is 12 minus 25. So what you're left with is 13 million. That next 13 million will be taxed at 21%. So you're now going to sum all these three together. What they give you is going to be your tax, right? So this is for someone that earns about 2 million a year. Then we also have for those that earn about 4 million a year. This is going to be their tax based on the different levels. Then lastly, for someone that earns about 100 million a year, which is about 8 million a month, this is how your tax is going to look like, right? So the first is at 0%, the next is at 15%, the next 9 million, 18%, the next 13 million, 21%, the next 23, the next 25 million will be charged at 23%. Then the remaining 50 million will be taxed at 25%. Now, what I want us to clarify is that when we look at the old tax laws and the new tax laws, there was actually a slide I was looking for, I couldn't get it. It shows that for every income bracket that we had looked at, they would actually be paying less. Okay, when you start paying more is for those that earn around 25 million annually and above. That is where they pay a bit. In fact, no, it's not for those 25, it's for those that earn 50 million. Yes. For those that earn 50 million and above, those are the ones that I know will start paying more than what they were paying under the previous rates. Okay. So when you hear that government wants to kill you, they want to kill you, that was not the idea. The idea was for the rich to pay more tax and for the lower earners not to pay as much tax, right? So that is for personal income tax. Due to time, I'll quickly rush through company income tax. Now, companies are considered judicial persons. Now, remember, we said under individual income tax, under the individual income tax, we said that if you have a business name, that's a sole proprietorship or partnership, the business, all right, the business is considered to be one with the person, with the owner of the business for a sole proprietorship or for a partnership. But for a limited liability, the company is said to be a person of itself that can sue and be sued. So when you are suing a limited liability company, you're not suing let's say the MD of the company, you're suing the company itself, right? So companies are considered juridical persons, right? If my lawyers in the house, they understand what I'm saying, so they can make contributions at the end to explain this further. So that is, a company is separate from its shareholders in the eyes of the law, more or less, right? Any profit generated by a company are subject to tax in the hands of the company and not the owners. Currently, companies are subject to income tax of 20% and 30% of taxable profits, depending on the size of the company, which is payable to FIRS. Now, currently, as it stands now, if your company makes less than 25 million, you will not pay company income tax. If your company makes between 25 million, or let's say 25 million and 1 naira, to 100 million, you'll be taxed at 20% currently now. Then if you make 100 million and above in a year, you'll be taxed at 30%. That's the current law. So you charge at 30%, not of your revenue, but of taxable profits, depending on the size of the company, right? So you're being taxed on your profits, and not just your profit, because there is total profit and there is accessible profit, but that is accounting. We won't really go too deep into that. So that's why I wanted to take my time with individual income tax, and because this company income tax could be a bit complex, and it's best for you to have an accountant. At least if you have a limited liability company, you know that you're going to be having lots of cash flow. So I'm guessing that you would get the service of an accountant. But there are some basic things I just want us to understand. So all Nigerian companies are also subject to what we call an education tax currently. All Nigerian companies are subject to an education tax of 3% of their accessible profits, and it's payable to FIRS. But from 2026, the Nigerian Revenue Service will continue to collect income from companies at 30%, and newly introduced development levy at 4% of accessible profits. As we go on, I will explain what I mean. So currently, under the old regime at the top here, under the old regime, we could see that if you make less than 25 million, you'll be taxed at 0%. 25 million to 100 million, you'll be taxed at 20%. 100 million and above, you'll be taxed at 30%, right? So, but from next year, when we start the with the Nigerian Tax Act, it has reclassified companies. So now there are no longer three classes of companies, because here you have small, medium, and large. All right. There are now two categories of companies: the small and others. Small companies and others. Now, small companies, according to the NTA, is less than 50 million. A company which generates revenue less than 50 million or does not have assets more than 250 million. Okay. While other companies are referred to as companies that generate revenue more than 50 million in a year or have more than 250 million asset base, right? They will be charged at 30%. So now there is no longer 20%. Is either you're charged at 0% or at 30%, right? Now, this is going to be effective from 2026. So you see that the medium-sized classification has been scrapped, right? So the fixed assets base of a company will be an additional indicator of whether it qualifies as a small company or not. And currently, we have various levies that we pay. Currently, we pay education tax at 3%, police at 0.005%, NASENI. NASENI is being paid by companies in banking, aviation, maritime, telecoms, ICT, oil and gas, with a turnover of above 100 million. They pay NASENI. Then NITD is paid by GSM companies. So we had all these other taxes that were paid by some companies, right? But now what we have is only the development levy. So all these other taxes have been merged into one, which is the development levy. And the development levy is taken at 4% of the company's accessible profits, right? With exemptions. The only exemptions are small companies, right? Which is a company with a turnover less than 50 million or an asset base less than 250 million, and non-resident companies. They are exempt from the development levy. So universal application mandatory for all Nigerian companies across all industries. Revenue allocation. So because this development levy is actually, so instead of breaking all these things down, they just put all of them together and call it development levy, right? Now, this development levy is going to be broken down into this education tax and police trust fund and all the rest. But it is now going to be handled under Section 59 of the Nigerian Tax Act. Okay. So this, I think, I've come to the end of the slide. So I think there was one more point I wanted to say just before we open the floor for questions and contributions. So we see here that this new tax laws is not as people make it to be. Yes, another thing I wanted to add is there was a news of without your TIN, you will not have, your bank accounts will be closed, locked, and all that. So no, for individuals, this is for individuals, right? For individuals, what is being worked upon currently, I think the executive chairman of the FIRS said this in a press conference last week, that it is your NIN is what is going to be used as your TIN, right? Okay, so your NIN can also be used as a TIN. They are working on it, right? They're working on how to merge that, but don't be afraid that by January 1st, they are going to lock everybody's account. No, things are not done like that, okay? They are still looking at how to harmonize it. The main idea is that everybody, they want to get as much people as possible into the tax bracket. Reason being that Nigeria's tax to GDP ratio is one of the lowest, even in Africa. No, I'm not talking about in the world, in Africa. So meaning there is lots of money that is being lost in tax revenue. So the main idea is to get as many people into the tax bracket as possible. And as you can see, the margin for paying company income tax has been increased. All right. Before it was 25 million, now it is 50 million. And my senior colleague will make some clarification to this. But I know there was also a bill that was proposed. I don't know if it has been passed to even make it 100 million. All right. Some clarification will be made on that. So that is now going to be companies that have income above 100 million are the companies that will pay for CIT. Now, paying for CIT, because let's say you have a business and your business, you make about 40 million, 40 million naira. That means you are not going to pay CIT. Because you are not paying CIT, doesn't mean you are not going to file. Now, this is the problem. This is also a mistake many people make, right? Every company has to file. What happens is that you will just file nil for your CIT, right? Because your revenue was not up to. So you'll be classified as a small company. So that is another problem, because in the office, I see many people come with that complaint, right? You say, we're not up to this amount. Yes, you're not up to this amount, but you have to file. You just need to file, right? It helps the government. Everybody complains that Nigeria does not have database. All right. So we're trying to work on getting a database everywhere. At least when the National Bureau of Statistics are giving their analysis and giving their statistical report, you know that this data is genuine because they have a wide net to gather that data. So it's very important for individuals as well. Individuals are expected to file their taxes. Even if, let's say you're working for a company, because of time, I didn't cover payee, that was individual taxes, right? Payee is pay as you earn. For those that are working for companies, you know that they collect tax from your salary, right? So even though they collect tax from your salary, you are still expected to file, okay? You would just report that the tax has already been taken from your salary. But if you had other sources of income, which of course I know we're all Nigerians, nobody has one source of income. Everybody is a hustler. So if your other source of income, you report. Now, while you're reporting, you can also explain the fact that I use so amount for data. Let's say for me, for instance, let's say for someone that is in tech, for instance, let's say you are working remotely or something, you have some expenses that you make. You pay rent for where you stay. Even if you're working from home, you pay rent for where you stay. You also pay for airtime and all the rest. So all those things are expenses that you make. So I'm not saying that everybody must become an accountant, but there are just some things we need to take note of. There's information about this new tax law. It's all over the internet. Don't just watch one YouTube video that is making everything seem like all hell is about to break loose. Take your time, do your research, and you'll see that there is just something that the government wants you to work alongside with them so that we have enough data for Nigeria as a whole. I think with this, I've come to the end. If so, my senior colleague will just make one or two contributions. Bro Kelechi, I don't know if you're still on call.
Okay, thank you so much, Brother Ozoma, for that very wonderful contribution. You have done very, very well, irrespective of the fact that personal income tax is not a space that we are used to. We concentrate more on companies and contracts. I really appreciate how you have broken down the issue as it affects personal income tax. I appreciate that. However, what I want to add to is just that that's what we call chargeable income, being that before those rates are being applied, there are other deductions. I think you made mention of it. There is also what we call rent income, rent relief. Before the introduction of the rent relief, we'll have what we call consolidated revenue allowance, which used to be, I think, 200,000 plus 20% of your turnover. So that was a uniform allowance that was granted before we deduct all those NHIF and all that. But now it has it has been reduced. It has been changed to what we call rent relief, which is 500, a maximum of 500,000 or 20% of your annual rent, whichever is lower. So if your annual rent, if 20% of your annual rent is more than 500,000, it should be streamlined or restricted to 500,000. But it is lower, that is what will be used. Then after the deductions, you now apply those rates. So that is all I can say for now. Mozoma, I'm very proud of you. You've done very well. Thank you very much.
Thank you very much, sir. So do we have any questions? Yes, Edakachi.
Thank you, Rosoma, for this very timely presentation. Last week I wasn't available, so I missed the first part that was handled by Bro Kelechi. But since I have come in, I knew I wasn't going to miss this one. My question, so thank you very much really for this. I've actually learned a lot from what you have presented. I just want to create a scenario. Let's say I am a sole proprietor. I have just a business name, not a limited liability company. And so I basically do my whatever business with my personal account, my personal bank account. And someone like me, I happen to receive a whole lot of funds from abroad. People send me money. Sometimes people send me money to go build houses for them. So I always receive this fund. So people just probably trust me with their funds and they just send it to me and go do this for me, go do this for me. So sometimes I receive so much more money than I actually earn. In that situation from 2026, what happens in a situation where I'm receiving all this income? Specifically, please go and help me do this. Please go and help me buy this. Please go and help me give people this. We have a scholarship foundation in the name of my father, and my siblings put money together, and I am the one that disburses scholarships to beneficiaries, which are university undergraduates and just a few people in secondary school. All these monies come through my account. Does it mean I'm going to be paying taxes for all that money that do not belong to me? Thank you.
Yes, thank you very much. Yes, I'll just make a quick response, then Bro Kelechuku will also add to it. So the first thing I like to advise is that try as much as possible. So you have a sole proprietorship, right? And I guess if you have a bank, all right, if you have a bank account, the bank account is in the name of that sole proprietorship, right? So let's say you have an account for your company, all right, or for your business. You also have your personal account. First thing I would say is try as much as possible not to allow private funds to pass through your business account, first and foremost, right? Try as much as possible not to allow, because again, you will not be taxed on gifts. You don't tax gifts, but or you won't tax help me and hold this money. Or if you move money from your Zenith Bank to your UBA bank, you won't be taxed on it, right? But for businesses, you need to try as much as possible to ensure that personal money does not pass through your business. If not, you have to explain to the tax authorities what that money was being used for, right? But for your individual account, okay, again, now this comes to mind again. As much as possible, let there be narrations when bank transfers are being made. Because I know that even if you are using teller, they'll ask for description. Reason being that you will need to, when you are filing your tax and you say that, oh, 100 million passed through my account, but everything was meant for my brother or something, is true, right? The law the government understand, or the tax administrators understand things like that. At least it's passing through your individual account, so not everything is being taxed. But you need to at least clarify that this money was a gift. This money was given to me by my brother to use and hold. This money was sent from my UBA account to my Zenith Bank account. So keeping of proper records is actually very, very important. But you are not going to be taxed on that income. So I'll pause here and allow my senior colleague to say something.
Sorry, just a follow-up question. I understand that. So that means, like, so in some cases, people just use their personal account to run their sole proprietorship. They don't go to open account now for that particular one-man business. They just use their personal accounts to run it. I've seen that happen a whole lot of times. So there is a blend of inflow from both company and individual sources, private sources, as the case may be. So that is a problem. The person should actually be sure to open account that is distinct for the company and make sure that right, if I got you right. And
That's the
then
first advice.
yes, and then the other part is so from what you said, will they wait till the end of year, like 2026? Will it be by December 2026, or even at the end of by January 2027 that the tax returns will be made for, and then they will check who made 800,000 and who did not? Or will they be prorating and then taking monthly? That's one thing I've not that's not been clear in my mind. Thank you.
Okay, Brocolitical, please, can you?
Okay. We further to your response. Document. It's very important that people keep records, as you have rightly said. If peradventure you have not been able to separate your maybe your bank for your enterprise or this thing, you are entitled to file what we call self-assessment. So you self-assess yourself and file. However, where the challenge will come is if your company has been risk profiled for audit. So when tax audit comes, it's going to be an issue. However, if you have documents to be able to disprove the taxman, that will aid. For instance, the issue of using your personal accounts to pay for some scholarships. So I believe that scholarship, there will be agreements or documents to back that scholarship. So if you present it to maybe scholarship awards, that can suffice as a document to substantiate your claim. So if you present it to the tax administrator, that can support. But as advice, it's just advisable to separate your personal dealings with that of your business. Then further to your question, whereby maybe probably the company does not use personal accounts for business link. There is a practical instance. Most times when we go to audit, for instance, we have hotels. Some of these hotels, it plays out a lot. So in fact, what we do, this is Nigeria. What we do most times is some of us go to those hotels before we even start that audit to just to pay. In most cases, when you pay, you go beforehand, you pay, you pay, you see they'll give you their personal account. So that is an evidence. So once we have that, it now becomes difficult when we come for that audit. It becomes difficult for the person to claim otherwise. So that's basically, so if you are using, in summary, if you are using your personal account for business, honestly, you have to really have a lot of documents to convince the tax administrator that it is not your income. That's my advice. Thank you.
Thank you very much. Then
Thank
also on when should you file your personal income tax? You're meant to file it on or before 31st of March of the preceding year, of the following year rather. So we're in 2025, for instance, right? So it's expected by 31st of March. This is for individuals. By 31st of March next year, you are expected to file your taxes, right? While for companies, it is 6 months after the end of the accounting year, which is, so normally in Nigeria, we use 31st December. That is the major thing. It's not set in stone, but that is most companies use 31st of December as the end of the accounting year. So for company income tax, it is 6 months after, which is June 30th. For personal income tax, it is March 31st.
Okay.
Thank
All
you.
right. Thank you very much, Uzo. So since the new tax regime is starting January 2026, does it mean people who are now new people in the tax net will now have to wait till March 2027 before they file their returns? Or will we continue to file returns for 2025 with the old laws? How does it
Yes.
work? Yeah.
Yes. So the Nigerian so the tax laws work based on there's a word for it. The laws are based on, there's a word for it, I can't remember the word, but basically the Nigerian tax laws have changed over time, right? We had for instance, I think VAT was increased from 5% to 7.5%. Either in 2011 or 2019. Can't really remember one of them. But if you had to file VAT, let's say before, as of 2008, you did not file your VAT. I'm just using an example now. It will be your VAT will be charged at 5%, which was the rate as at 2008. So what that means is, so for now, because the law is going to take action from 2026, the businesses and transactions we've done in 2025 will be based on the current laws. But every other transaction now that happens from 2026, okay, would be based on the new laws. All right. Thank you.
Thank you very much.
Renaissance. Yes, Renaissance. Your hand is up.
Yes, thank you so much, Abrozoma, for that insightful topic. The tax law is something that is new and it's wavering around everywhere. Everybody wants to understand it. So my question is, for those who sell, unlike those who do roadside business shops, how is their tax being monitored? How are they going to be returning their tax? And what are the implications for them? The pepper sellers, the small kiosk person, the woman that sells bread, how are they going to be returning their tax? And what are the implications when they don't? Thank you.
All right. So I'll state that under, so there is what they call Oh, um, currently we refer to it as best of judgment. Administrative, um, what's the word now? It's not administrative judgment, it's administrative something. I can't
Administrative
remember
assessment.
administrative assessment. Thank you, sir. Administrative assessment. So what happens is now these new for individuals like the market woman and those that we know are going to have issues with filing, they will have administrative assessments, meaning the tax administrators are going to assess them based on the particular business they are doing. So that particular one is still being worked upon, and there will be gazettes released on how it will be implemented. I was very sure the last press conference that the executive chairman of the Federal Inland Revenue Service did, he said something like that. So everything concerning them will have administrative assessment. So what happens is the tax administrators will, for instance, come to their pepper shed, look at the size of their shop, if they even have a shop or that kind of thing, and just give an administrative assessment based on what they see. Right now, something is going to release, the gazette will be released as to how the assessment will be taking place. But one thing I want us to know is that the way these laws are written is not targeting the person selling pepper on the street. So I'm very sure at the end of the day, you look at someone that is selling pepper, they could just calculate it in such a way that the person barely falls into the tax net or something like that. But what I'm sure of is that the way this law is written, the main purpose of this law is first of all to get as much people into the target. So why we have an administrative assessment for them is because we have a very large informal sector in Nigeria. So we want to want to at least capture the informal sector, right? So the main aim is not to collect the little money that they earn, but to at least capture the transactions that take place in the informal sector. All right. So administrative assessment will be used for such people. That is generally the answer to your question.
Then,
Thank
sorry, in addition to that,
Yes, sir.
there is what we call payer ID. In fact, that is how the service is trying to capture even those sectors, the informal sector. Now, that is why people are clamoring that from 2026, though it might be extended, that if you don't have a payer ID, it might be difficult for you to access your bank account or open new ones. So by payer ID, that is more or less like a tax identification number that every individual should be able to have. So whether you are in the informal sector and all that, and you have business transactions, definitely it will be a way to capture those informal sectors to tax. However, there will be difficulty for those informal sectors that most of them don't even have don't bank through this, and they just collect paper sellers, they not collect money and might not have bank account. Those ones with all a sense of honesty will be difficult to tax. That is where the administrative assessments, maybe through their unions and all that, will be taxed. So as Brother Zoma has said, there will be circulars on how practicable, how to practicalize all this. Thank you.
Thank you very much. So thank you very much for your time. I would like to hand over back to the organizers of the program. Thank you very much.
All right. Thank you very much for your time. Thank you for coming. It's been a wonderful one today. I decided to keep quiet and listen so that I can learn how practical tax matters can be applied, even in my little corner as a pepper seller, just like somebody made mention of pepper sellers. So I know we have all benefited. Tuesday is a day for that outreach. We don't joke with it. It's a day of impartation, it's a day of refreshment, it's a day of new idea in a new dimension, or new ideas in a new dimension. Tuesday's meeting has been so transforming, so redefining, so helping in our businesses, and then even as in our Christian journey. Sometimes these things are not taught in other churches because we feel it's a spiritual environment and all we should be talking is spiritual, 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 and a lot of things that we ought to have been looked upon too as Christians, that will help our Christian life too. We ignore them. As a result, many of the so-called, or I mean, the people I'm referring to are also suffering it. Some, including our church too, because we feel all is about spirituality, and what concerns our environment doesn't concern us. That is not true. That is not true. In fact, the fact that we are aware of what is happening within our environment will even help us as Christians to not just be focusing on spirituality, but also to ensure that we live up to the standard of our environment. And that will actually help our lights to shine brighter and brighter. Tuesdays is our meeting days. I want to encourage you to be part of it. Every Tuesdays, same time, 7 p.m., 1 hour's interval or 1 hour, 30 minutes each Tuesdays in our meetings. And it's been a whole lot of ideas to groom us, either spiritually, like I said, or otherwise, as an entrepreneur, or what so have you, whatever thing you think of, and how to grow your life. And then outside Tuesday is Wednesday too. That is tomorrow. The same time, 7 p.m., the same platform. We meet to pray. And tomorrow we present all our cases to God. And then we believe that between that tomorrow and before celebration Sabbath, testimonies will be hovering, manifesting in our midst. We only gathered on Sabbath morning to celebrate and also to thank God, to what's it called? Give our testimonies of what the Lord has done within the season. So please, if you are joining us for the first time, don't miss out. Keep joining us. The same Zoom platform, like I said, the same time, 7 p.m. Friday evening, same time, Bible studies or lesson studies. That's when we meet to crack questions together. I mean, a kind of digging deep into the Bible. You can ask any kind of questions you think is in line with the day topic. So please be part of it. Also, help someone, encourage someone to be part of it. And as you do, the Lord will bless you. You are all welcome. Thank you, our facilitators this evening, the tax administrators. We are happy for your wonderful presentation, part 1, and today part 2. I'm looking forward to see part 3. Part 3. Just prepare your mind. I don't know, the organizers, please take note. We are expecting them for part 3, so that by the time we enter 26 as it has been aligned We will not be afraid anymore. We'll walk into 26 and then expect whatever thing they want to give us, and we'll move on with it. And the Lord will grant us victory, even at the very end of it. We will all celebrate our victory over it all. That will be our portion. Okay. Media team, please give us closing hymn.
I'm resting on the upward way, new heights I'm gaining every day, still praying as I onward bound. Lord, plant my feet on higher ground. Lord, lift me up and let me stand, by faith on heaven's stable land, a higher plane than I have found. Lord, plant my feet on higher ground. My heart has no desire to stay where doubts arise and fears dismay. Though some may dwell where days abound, my prayer, my aim is higher ground. Lord, lift me up and let me stand, by faith on heaven's stable land, a higher plane than I have found. Lord, plant my feet on higher ground. I want to scale the utmost height and catch a gleam of glory bright, but still I'll pray till heaven I found. Lord, lead me on to higher ground. Lord, lift me up and let me stand, by faith on heaven's stable land, a higher plane than I have found. Lord, plant my feet on higher ground.
And then, precious Lord, we bless and adore you this evening. Thank you for the gift of this evening. Once again, thank you for your grace and mercies upon our lives. Thank you for knowledge, wisdom, and understanding. And Lord, we are asking that even as we live here now, may we never leave your presence. Let your presence continue to guide us in all that we do, and that all fears will be out of our endeavors. All fears will be out of our family. All fears will be out of our church. And victory will be prominent in our midst. May this be our experience. Blessed be your holy name. Even as we enter the remaining few days of this week, Lord, at the end of the week, you will grant us victory, and your name alone will be exalted forever and ever. These are many more blessings, Lord, for we have prayed